Okay, so welcome to this module where we're going to be talking about advanced market structure. Okay, and this advanced market structure is all about the smart money concept market structure. So, what I've been doing in the past is all about retail structure. Okay, how to use your trend line, support and resistance, in as much as those things work very well. Remember, when I started the section, I told you guys about how the basic things are what still works in the market. Okay, but then sometimes the market is now beginning to get so complicated, not really complicated per se, but if complicated is going to explain better or express my points better, I think I should use the word complicated. That you need to have an advanced knowledge on market structure in order for you to be able to profit maximally from the market. Okay, so in this particular module, I'm going to be exposing you to some of the advanced market structure that you need to familiarize yourself with in order for you to become really, really profitable in the crypto market, right? So without wasting so much time, let's get into the course proper, right? So of course, you know what market structure is, okay? The last time I was talking about market structure, I talked about market structure as the various stages of the market, okay? Remember when we talked about the entire crypto market, when you look at your chart, okay, that chart is not just a random occurrence of price action. No, it actually has its different phases. So each of these phases, they come together to form the entire market structure, okay? So understanding the psychology behind the formation of the market structure will in no small way make trading easy for you. That's just the truth. Okay, if you look at the progression of this course, I started by explaining some very basic things, and then the more we are advancing into the course, the more we are getting to kind of much more complex stuff. Okay, so this particular aspect is more like we're building on what we have done before. Okay, so to now as you're progressing in this knowledge, right, to get to a point where you're going to agree with me that the thing that's going to determine your success as a trader is your ability to know how to identify your market structure well and your liquidity. Look, I think liquidity was the last, second to the last concept we treated before this particular advanced market structure. That is show that all of the knowledge is what is progressive. Of course, you cannot get to advance if you're yet to comprehend the basic knowledge. Okay, so that is what I'm trying to explain to you. And of course, market structure is going to be really exciting for you to understand. Okay, as it will show you now, the market structure will show you the exact progression. It will show you as the market progresses from one phase to the next. Of course, if you remember the market cycle, that's when I was doing the general market cycle, I talked about the phase of mosquito. I did some one or two illustrations, and I believe you still remember those illustrations. So having an idea of this market structure and how it is being formed is going to help you know, okay, if the market is at this particular stage, this is what is most likely going to happen next. And then what is going to happen next is more like giving you an advantage in the market. All right, so that's exactly what market structure is going to do. So when I'm saying advanced, the advanced market structure is built upon the basic market structures. Of course, since I'm talking about advanced here, you're going to see it. So when I'm saying advanced, don't start thinking maybe it's something really big like that. No. It's just like a continuation, a build up. In secondary school, when we started learning about one addition, subtraction, multiplication, then it got to a point where we started learning about standard deviation. You can see they didn't start teaching standard deviation before teaching addition and subtraction. No, they started with the basics, and then the complex mathematics is built on the basics. So it's just the same thing as this market structure, right? So let us progress. Okay, so now remember when we started, one of the bulk of this training was actually focused on on the market structure, and then what we did before is actually the basic, or let's call it the retail market structure, where I was telling you the formation of the uptrend, downtrend, support and resistance. All of those things I'm talking together, I'm explaining to you, come together to form what we call the retail market structure. Where I told you in an uptrend you have the situation of a higher high, then in a low trend you have the formation of lower lows, and then in an up you can see it here, higher highs, higher lows, lower high, and stuff like that. Okay, we also talked about the breakout structure, we also talked about the retest structure and the demand and supply zone. All of these things come together to form the retail market structure. Now the retail market structure is just like the basic market structure. Of course, they still work, but then what about the market? That when I was explaining to you guys all of this retail market structure, I was more like using a textbook illustration, more like a perfect scenario. But you'd agree with me, whenever you go to the chart, there are certain instances that you'll not be able to use your trend line, in as much as you want to use your trend line, but because of how the market is inconsistent, you discover that trying to connect your areas of value to your trend line is not really possible. So in that situation, do you just go blank? No. That's where you employ the idea of the advanced market structure, which you're going to learn here. So you can see that the advanced market structure is not really come here to substitute the retail structures entirely, but just to teach you how to better equip and position yourself for more profit in the market. Okay, so let's proceed. Of course, so still about on the retail market structure, you can see how we explained it here. You can see the uptrend and the downtrend, right? So you can see the correction and then the retracement. You can see my higher high and my lower low. You can see it here. It's all beautifully illustrated here. Of course, you can see the uptrend and the downtrend and then the trend channel and all of these things that we've talked about in the past. This is exactly how a retail would want to explain to you the market structure, okay? And then the next, when we're talking about the breakout and retest structure, of course, this is what we remember about the breakout and retest structure. So all of this is now, in as much as they're the retest structure, can I tell you that what I'm going to be teaching you in the next few slides now is going to be something that is built on this knowledge. Like I told you, it's not going to be something entirely different. No, it's also what an in-depth study into what this retest structure. Because like I said, the market is full of inconsistencies. So this advanced market structure would help you to better interpret these inconsistencies. Okay, of course, if you cannot see your chart very, because I would want you to check your YouTube video quality, just go and change it to the highest so you'll be able to see each of the structures I am drawing very, very well. Okay, so let us progress. Okay, so now I'm talking about the advanced market structure. It's all about the what? The SMC market structure. So if you hear anybody telling you advanced market structure, just know that's what is SMC. Okay, other people might want to call it ICT. That is the inner cycle trading. Okay, whichever one that works for you, call it like that. Okay, but I chose to call it what? The smart money concept. Okay, and then in this smart money concept market structure, some of the basic structure or some of the prominent structure we're going to be talking about is break of structure. That's the BOS, the change of character, which is the COCH, and then the return to order block. Now, this, of course, you know what OB is. OB means order block. Of course, these things I'm telling you, they have different nomenclature. You might see different people and they'll be calling this break of structure as BMS, break of mind, whichever one it is. Just have, if you have that idea, the nomenclature is not going to confuse you that much. But the moment you don't really understand this, that's why I said understanding the psychology. Once you understand the psychology, regardless of the nomenclature any tutor or any expert decides to use, you'll still not be lost. Okay, so follow me as I explain to you properly. Okay, so let us start from the BOS, which of course is the word break of structure. Okay, so in an uptrend, it is formed when there's a break of the previous higher high. Of course, you know when we're talking about what uptrend. You see, uptrend is formed by a progression of higher highs, higher low, higher high. So the higher highs keep on getting what? High. Of course, these things I'm explaining here is something you should be able to visualize in your head. If you can't visualize it, I'll refer you back to your previous videos on the components or the structures of an uptrend. Okay, so in a downtrend, a break of structure is formed when there's a break of the previous lower low. Of course, I want you guys to try and use your imagination to picture it. Okay, picture it when there's a break of a lower low, when there's a break of the previous higher high. If you cannot picture it, just flow with me. I'm going to be showing you guys some pictorial illustrations in the next slides. Okay, so after a break of structure, there's a demand on supply zone. Okay, after every break of structure, there's always a demand and supply zone. Of course, you know what our demand and supply zone is. So don't really, that's why I want you guys to settle down, just calm down and then flow with me. You're going to see how each of these things are not really different from what you've learned before. Just like I said, this is what an advanced form of knowledge. Okay, so this is it now. Of course, you can see it. This is a typical what uptrend. Of course, you can see the higher high. Of course, I don't need to explain to you what the higher high is. So you can see that before a BOS is formed, the previous higher high must have been broken. By broken, it means it must have been what has been passed. It's past the right English here, but you should understand what I'm trying to say. So whenever a new higher high is about to be formed, there's a BOS. You can see the illustration here perfectly. So you can see the first high. As the first high was broken, we had a BOS. As the second high was broken to the third, we have a BOS. So a BOS is when a higher high is broken. That is for an uptrend scenario. Okay. Of course, you know what you should know what our demand and supply zones are. So looking at this chart now, you should know where our demand and supply zones are. Because I said whenever there's a break of structure, a demand and supply zone is always formed, either a demand or a supply zone. So in this particular scenario now, it is always a demand zone. Of course, you know what our demand zone are. So once there's a break of structure, there's a demand zone that contains the order block that would lead towards the creation of the new higher high. If any of the language I'm using here is confusing you, it means you're yet to fully understand the basic or the retail market structure. So I'll refer you back to that particular course. Study it very well to be able to comprehend or relate to what I'm saying now. Okay, so this is how exactly what a BOS means. A break when the market surpasses its previous higher high. All right, so let's go on. So, of course, you can see the downtrend scenario when the market breaks the previous lower low. Of course, you can see the lower low. We say the downtrend is formed by a lower low, lower high, lower low, lower high, lower low, lower low, lower high. So you can see it here. So now these people now you can see that nobody's now just by knowing how to identify this BOS number, a smart money trader now would not necessarily need to use a trend line. So sometimes if you have been following my recent chart, I don't use a trend. In as much as I touch about trend line, I'm not necessarily using a trend line. Because just excuse me, having the knowledge of my break of structures is already what not really substituting, but it's making me almost not. I don't really have so much need for a trend line. Although I used to use a trend line for more like additional confirmations. But when the market is inconsistent, remember I told you that there are certain structures you'd see. Then as much as you know that this is what the market is doing, but your trend line cannot just fall on the areas of value. Like the areas of value are displaced. This is like a textbook illustration. This is like a textbook illustration. In this particular situation now, our trend line can still go. If you use your trend line now, your trend line can still identify for you the downtrend perfectly. But when you go on the chart now, in as much as sometimes the market might present for you a perfect scenario like this, on other times it might not present for you a perfect scenario like this. So this is where you need to switch into what using your advanced market structure. Okay, just have it at the back of your mind that a BOS is used in place, not really in place of a trend line, but as an advanced form of trend line here. So if you don't see anybody using a trend line, but then if you see the person using a BOS, have it at the back of your mind that all of you are doing the same thing. Okay, so let us progress. Now, what is a change of character now? In an uptrend, it is formed when there's a break of a previous higher low. Now, I want you just pick your biro and then just try and see how you can just try and represent this thing in what on your book before we go into the next slide. See if you can be able to interpret this information even before I show you when there's a break of the previous higher low. Of course, see the market is made up of higher high, higher low, higher high, higher low, higher high, higher low. So when the last higher low was broken, a change of character has formed. That's in an uptrend. Well, in a downtrend, it is formed when there's a break in the previous lower high. Of course, you know how a downtrend is formed. Lower low, lower high, lower low, lower high, lower low, lower high. So once the previous lower high is broken, then we have a change of character. Now, a change of character signifies a possible change in trend. Are you not seeing the correlation now? Of course, this serves similar purposes with the breakout structures in the retail concept. If you're very conversant with your retail concept, I talked about the breakout structure. When a trend line is broken, it means the trend is about to change from either an uptrend to a downtrend or from a downtrend to an uptrend. You can see that that's a breakout structure. But because of this advanced market structure, now we're not calling it a change of character, a church. Are you getting it now? So it's just simple. No, just so that the advanced market structure is built upon the basic or the retail market structure. If you want to overcomplicate things for yourself, best of luck. But then this is how best I want to relate it, because this is how I've been able to relate it to be able to make more meaning out of the market, right? So, of course, you have the higher high, higher low, higher high, higher low, higher high, higher low. You can see this green. You can see the green. What's the green line? I indicated it with an X. You can see there. If you cannot see very well, increase your YouTube quality your video quality on YouTube. So you can see that. How did I mark this list as a change of character? You can see that my previous higher low was broken. If I was using a trend line, and now just try to use your head and use a trend line to join this thing, you discover that at this particular point that I mark my change of character, we call it the breakout. There's a breakout. So what does the breakout signify? It signifies that the uptrend is about to change to a downtrend. That's why we call it the change of character. You can see how exciting this thing. They're not really difficult to understand. Okay, so this is how it is. Now I'm going to tell you guys the advantage of this SMC and the retail concept. So which one you think is much more better and effective for you to use, right? So let us progress now. Of course, you can see the change of character in the downtrend scenario. A downtrend is formed by lower high, lower low, lower high, lower low, lower. So you can see how the moment the price went above the previous lower high, of course, you can see the lower high I indicated with my X. Because this is not something, I'm not doing magic here. Okay, if you were to be a trend line, the retail trader, a retail trader would have just drawn his trend line, and once the team breaks the trend line, he will say, I've gotten my breakout structure. So market's about to reverse my downtrend to an uptrend. So you can see it here. But an advanced trader now would not want to use a trend line because they feel like, if you're using a trend line, you're not a savvy person, you're still backward. So fine, if you want to use this change of character, it's still beautiful, they still serve the same purposes. Just that using the trend line now would kind of limit your usage, because the market will not always provide you with a perfect scenario like this where you're going to be seeing a perfect higher high, lower low, lower high, lower high, lower. No, it's not going to always provide you with a perfect anything like this, a perfect knowledge like this, or a perfect structure like this. So that's why you need to actually learn how to use the advanced market structure. All right, so this is just all about the change of character. You can see that this is not something that's difficult. If it's difficult, that's probably because you're encountering it for the first time. So I urge you to take your time and revisit it this time around with your pen and paper, and then note down, write it on your notes. So you should be able to make meaning for yourself. Okay, so let us proceed. Because what do you have? The next was RTO, return to order block. Of course, you know what an order block is. So this is when the price locates the OB formed after the church, mitigate it before continuing the intended direction. All of this is big grammar. Don't worry, I'm going to show you a pictorial illustration so you can better understand what I'm trying to say. But of course, if you've known about your market structure, your retail market structure, this shouldn't be a problem to you again. Because like I said, the RTO in the retail, not retail, in the retail concept, it is synonymous to the retail structures. Of course, when we're talking about the breakout and the retail structures, you can just try to visualize what a breakout and retail structure is. So this RTO serves the same purpose. So remember when you say breakout and retest, the price actually retest and locates the order block before continuing the intended direction. So this RTO means return to order block. It's just like what a retest. Okay, but this they decided to just change the nomenclature so that they'll confuse us, but we refuse to be confused. Okay, so let's go to a pictorial illustration now. Of course, you can see it here. We have an uptrend, we have a higher high, higher low, higher high, higher low, and then we had a break of the higher low, which gives us a change of character. Because a change of character is not sufficient. When we're talking about using the conventional to the retail structures, when we have a breakout structure, you're not expected to enter the market when you have a breakout structure. Why? Because you're waiting for a retest. You know that after a break of structure, there's always a retest. Sorry, after a breakout structure, there's always a retest. So in as much as you've confirmed the church here, what you need to do is to go, the moment you confirm a church, that's a change of character, what you need to do is to go back and look for the OB. Of course, you can see how I identified my OB here. Of course, I taught you guys how to use an OB. You can see how I've identified I've been able to mark out my areas of value. Okay, so what happened next? Remember, I say return to order block. It's just normal English. The price, in as much as the price has broke down from the lower low, from the higher low, it's now going to return to the order block before continuing the intended direction. Remember, after the change of character, you expected that price should continue going down. Price should change from an uptrend to a downtrend, right? But before it's going to fully embark on the downtrend, you need to locate the order block, mitigate. When I mean mitigate, by mitigate means you should go and trigger the order block. That's what mitigate means. Mitigate means to just go and tap on the order block. So at this particular point, and this order block has been mitigated because the price has actually gone back, returned to order block. It has gone back, mitigated it, and now we're in a downtrend. So if you have to take in order for you to take your entry, of course, this is how taking your entry should not be difficult for you. Of course, I'm going to teach you guys an entry model based on this chart, but I just wanted you guys to understand where I'm coming from now. This alone is an entry model, which I'm going to be emphasizing later on, but just have an idea of this is what it means. So I have return to order block, right? So you can see it. We have the break of structures, and then we had a church at one point in time. Then after the church, we now have the return to order block, and boom, you enter your trade, and of course, you're in deep profit. Okay, this thing is very, very easy to relate, but where the problem is when you don't practice, because of course you need to train your eyes to be able to see some of these structures. When we say advanced, the advanced is not really in learning it. In learning it, it is easy. The advanced come in actually spotting it in the real life market. Of course, we're going to be doing 1 or 2 live sessions. I'm going to be sharing my chart, and then you should be able to discern what I'm trying to explain here, right? So let us proceed now. Now, final note now, because we are done with the basic, the prominent structures in the smart money concept. Of course, there's other structures, but those ones are something that they can easily be overlooked. Okay, they're all just like literally a fake and church or fake BOS and stuff like that. Okay, don't worry, we're going to learn those ones as we progress. Okay, but I'm just trying to expose you to the main structure sets before we now go into identifying fake church or fake BOS. Okay, so final note now, advanced market structure, which is the SMC market structure, provides you with a more detailed entry than the retail concept. Of course, I taught you guys about what retail concept. Some of you might be asking that why don't I just stick to the retail concept? Of course, you can stick to the retail concept and still make money. Beautiful. That's what I've been doing before. But then if you want to now know how to roll the big boys for it, of course, we want to always become better. If you want to become better, you need to actually see how you can equip yourself with the advanced knowledge, see how you can master this advanced market structure. Because you're going to be getting much more better entry, and your speculation is going to be becoming much more effective, right? Advanced market structure can be used in all market situations, whereas the retail concept cannot. Remember, I told you when you're looking at the market now. Remember when I was teaching you guys, I was using more like a best case scenario, using a book illustration, like a perfect lower low, lower high, lower low, lower high, or a higher high, higher low, higher high, higher low. I was using a best case scenario. If sometimes you can see those ones on the market and you can do it, and then boom, you're going to be getting your good entry using the retail structures. But most often, the market will not give you a best case scenario like that. That is why you need to learn how to use the advanced market structure. So you're better positioned to look the market. Okay, learn to identify your structures and areas of liquidity very well, and you become unstoppable. See, I am actually reserving some of these final notes to when the course is now becoming advanced, so that you're able to know that some of the things you're learning before, in as not that they are not useful, but they are useful. They're only there to help build, or to help make you much more effective in the advanced market structure. Okay, let me explain what I'm trying to say now. How many of you are being paid today if you're a working class? How many of you are being paid today by learning how to say ABCD? Nobody is paid for learning how to do ABCD, but people are actually paid for learning how to read. But can you learn how to read if you don't know your ABCD? No. So this does not mean that your ABCD are useless, just that nobody rewards you for knowing some little things. They reward you for knowing how to stitch up these little things to make meaning out of bigger things. Okay, so market structure and your liquidity. Remember, when I'm talking about liquidity, I emphasize how important liquidity is. So I want you guys to actually go back, make research on YouTube. There are certain videos I'm going to be releasing to you guys, so you guys can go and watch and learn more about liquidity. Liquidity is a broad concept. As I'm recording this particular in this particular session now, I'm currently my current students understand that I'm currently in a stage where liquidity is messed up in my analysis. Like, I'm able to do a very clean analysis, but because of I was unable to spot the area of liquidity, I always get stopped out before market move as I want it to do. It's a very annoying experience. But then mastering liquidity is going to give you what? An edge, right? So note at the back of mind that if you know how the market moves from one phase to another, and then you know how to spot liquidity, you're going to become unstoppable, because you'll be able to know every movement in the market. Okay, so that is what the final note I'm trying to explain to you guys here. Okay, so now let's go to the last session of this particular tutorial. So I'm going to teach you the entry model based on chart. Now, this chart model is an entry model. So if you're asking how do you use the advanced market, how do you use the advanced market structure to trade? Now, this is how you use it to trade. This is a typical uptrend scenario. I want to teach you how to trade with the chart model, combining the whole liquidity and everything. So you can see that the uptrend is progressing higher high, higher low, higher high, higher low, higher high, higher low. Then at a point we had our change of character. The moment you have your change of character, what I meant to do, the moment you identify a change of character, run and go and look for what your order block. Of course, you can see how I've identified my order block here. Okay, now the moment you've identified your order block, find the area of liquidity. Of course, know what liquidity is. You can see how I spotted my liquidity here. So the moment you have you've been able to identify your change of character, identify your order block, and then you identify the liquidity below the order block. That is it's an A-class entry. It's an A-class entry. You're going to print massively from that structures. So just look at it like this. Just go on your chart. Try and backtest. By backtesting, I mean, of course, you know what backtesting is. Just try and backtest this particular strategy. You're going to see that it works fire. It works really good. 80% of the time, this strategy works. Where you have a BOS, and then you have a change of character. The moment you have a change of character, identify your order block, identify your areas of liquidity, and pick your entry based on the order block you've identified. In fact, take a screenshot of this particular thing and go and backtest it. Right? So let me show you guys some real life situations. Okay, of course you can see it here. You can see you might not see the full picture here because of what I just showed you. What the main part. You can see the change of character, the arrow up. Then you can see how I identified the owner of this chart identified his liquidity. Then you can see that just below his liquidity, he picked his entry. You can see how the market came and played out perfectly as I explained to you in the previous slide. Right? So this is exactly how this works. You can see that this is not really presenting itself verbatim as I want it to be. But the moment you keep on interacting with the market, all of these noises will begin to your eye will be able to filter all of these noises, and you'll be able to make more meaning out of this market. Right? So let's go to more illustration again. You can see it here. It's the same thing. You can see our change of character. You can see the liquidity. Just look at it. You can see the liquidity there, the tiny liquidity there. These are more like real life situations. But of course, even the textbook illustrations can enable you to make the most meaning out of the real life situations. So it's not as if the real life situations are not really, you can see them on the market, but sometimes you need to actually train your eyes. Because trust me, guys, you can give a novice this particular thing, and they'll be like, what is this? They don't even understand any of these things. But now that you've learned about market structure, you can discover that this person did not even use anything like a trend line. He did not use support and resistance. But look at how you've been able to make a trade. What did he use? Advanced market structure. Right? So this is an entry model based on the chart model. Right? So I trust this video was helpful. If it's not, I would encourage you to take your time and watch through the video again, and like watch it again and again and again. Of course, watching a video once does not really guarantee you're going to get good results. But if you watch it once, twice, thrice, then definitely you're going to begin to make more meaning out of the chart. All right. So practice, practice, practice. Okay. And of course, study extensively about market structure. I'm going to recommend a few YouTube videos for you guys to watch. Watch these videos, guys. I cannot emphasize practice. Practice until you're tired of. Even if you're tired, keep on practicing, because the moment it begins to pay you, you're going to be made for life. Trading is going to change your life, and I'm here to make it a reality for you guys. But I can't do it. I can't come to home and force you out to. I can't come to home and force you to practice. Okay, practice is up to you. It's 100% your responsibility. I've given you guys the foundational knowledge you need. But to go on the chart, it's up to you guys. So I trust you guys to make the right decision and practice every day, right? So see you guys in the next month.